Hey guys, Stokes here. Welcome back to another weekend trading edge video. If you're a returner, it's great to see that you're sticking to your goal of tuning in to this video each and every week. And if you're new, welcome. This is a weekly video amongst the millions of other videos that I do here on YouTube, where I come in and I share a few of the top trading ideas that are on my radar for the week ahead, along with some updates on the news side of things, and of course some random trading tips that will help you navigate the sometimes treacherous journey of becoming a consistently profitable trader. On the menu today, we've got a little bit of everything. We're talking potential breakout trades, we've got continuation patterns, we got head and shoulders, we got ciphers, and we have both kind of inward, so traditional triangles, and also outward slanting triangles as well that we're going to talk about today. But before we hop into the charts, let's talk a little bit about what's happening off the charts. Friday was supposed to be our biggest news day of the year, but arguably the biggest piece of news was that there was no news at all. You see, the market was expecting the ruling from the US Supreme Court on the legalities of some of the President Trump tariffs. And this is something that would have had a major economic impact on the world and therefore the markets. Instead, however, we got nothing. So long story short, just to explain it real quick, the market is currently pricing in about a 75% chance that at least some of the tariffs that Trump put in are going to be reversed. This is going to create a lot of uncertainty around the whole kind of economic agenda that he has. And on top of that, it could mean that the US government has to write a refund check or multiple refund checks up to about $150 billion. So yeah, not exactly a small deal. Now, that being said, the main event was still the job numbers, which I covered in that special Jobs Friday video I put out in the morning. Thank you for the great feedback on that, by the way. And if you remember, expectations were pretty low going into it. The market expected a number between 60 and 70K. And somehow we still managed to miss. The report came out at about 50,000, I believe. And on top of that, right, remember I told you revisions would be important? The November reading was also revised lower as well. So double great news from jobs. Now, to be fair, the unemployment rate did tick slightly lower, so it wasn't a total disaster. And the market said to be looking at that a little bit more importantly now versus the minuscule numbers that we've been getting. But overall, it was a mixed bag. And honestly, if you look at any of the price charts out there, that's exactly what the candlestick formations will tell you. A lot of this happening, right? Finally, the last bit of news came out of Japan, and this is actually going to lead us into our first trading idea. Now, despite a rate hike back in December, it looks like Japan is going to hold steady at their next interest rate decision later this January 23rd, I believe it is. Don't quote me on that. And when you combine that with some election news that is happening, well, let's just say the yen we think is going to remain pretty weak. So let's talk about how we can take advantage of that. So we're going to kick off here on the dollar yen daily. We're going to follow up on an idea of yen weakness, a little bit of dollar strength as well, but mainly yen weakness. And I really like the pattern that we're forming here, right? We have a nice little upward slanting trend line here at the bottom. We have these equal highs right here. This thing looks as if it's ready to break out to the upside. However, the one problem I have with this setup is that you guys know I follow a process, IPDE, identify, predict, decide, execute, and that starts with identifying where this pattern is setting up at. And if I take my horizontal line tool and just draw it right at the highest point right here and look left, you're going to see that we are currently at a previous level of structure and have not violated that level of structure. So something that I need to see when I'm looking for a bullish continuation is I need to see a violation of the most recent level of structure. That way I can make the prediction that price is likely to go up. So I don't have that yet, but the good news is if we do get a breakout out of this formation, there is a chance that that breakout can, well, then break out of that higher level as well. And that's something I'll be keeping an eye out. Now, if we do get above that level, the next question is where is price likely to go to next? This is where we can scroll out on our daily chart. And the level that really stands out to me, I'll just draw a big one here. We can get it in more detail as we get closer to the trading opportunity. But the level that I like is going to be right here. which is a zone between the lows of 160.22 and the highs of 162 even. I really like that 161.30 level as well, but I said we can revisit this at a later time. So I'll drag this out a little bit. That way you can see the potential opportunity. If we can break out of this pattern, and for me personally, break out of this second white line here, I do think we have the opportunity to go up to that higher zone. So keep an eye on that with the yen. Next up is the dollar Canada, and speaking of zones, we are right beneath the next zone that I had on my radar. Live room traders, you'll remember this from during the week. We were looking at a potential reversal here with our head and shoulders pattern. We'll just redraw that back on here. We had a left shoulder there, we had a head down here, we had a right shoulder here, and then boom, look at that, completed perfectly. However, the problem that I personally had with this from my trading perspective is that we had these levels of structure right above that neckline, and we needed a violation of those and a retest of those as well before we can look for a trading opportunity. Now, we did have a nice one down here on the hourly. It wasn't something I got involved with, but what I'll be looking for is one of two things to happen here. One, and we can go down to the hourly. One, we can look for one last hurrah, meaning one last retracement back into our previous level of structure, this little breakout that we had right here, and then a chance to trade it up higher. That would be for a bullish opportunity. The second opportunity would be saying, hey, maybe we don't come back there, we just go straight up, and then we look for an exhaustion pattern, meaning we look for a counter trend trade in this next level of interest, and we look for an opportunity to trade this back down to whatever level of structure forms while this is in progress. So two opportunities here on the dollar Canada. One is going to be for a pullback trade with one last hurrah going up. The other one is going to be a counter trend trade, waiting for price action to reach that ultimate zone and then bounce to the downside. And of course, as we spoke about in previous videos, you can always do both. You could be someone that trades it up, takes your profit, and trades it right back down. Now, while we're on the subject of head and shoulders, Aussie dollar here on the daily chart has a nice head and shoulders potentially setting up. There's some other cool things setting up there as well, but let's first start with the head and shoulders as we're about halfway there. We have our bullish run right here. We have our pivot giving us our left shoulder, our retracement here. We have our brief extension up, giving us our head, and then a move back down to our neckline right here. If price action were to bounce up here and then come back down, that would give us our head and shoulders pattern, which would be a potential bearish trading opportunity. And where would I look for that bearish opportunity to come to? Well, right in this area down here. So looking at an area between 66.30s and about 66 even. Now, something else may be forming here as well. Two something else's. We can focus on, I guess, both, or the smaller one's more important, the bigger one's further away, but we'll do it just for reps in the market. And that is going to be a potential Cypher pattern. So this initial run up, which is our swing low to swing high, the starting point of that head and shoulders pattern, is also going to be the starting point of our Cypher. This is going to be our X leg. This is going to be our A leg right here. My drawings are horrible, but they will make sense. We then retrace right here, giving us our B retracement. We extend ever so slightly to the upside, giving us our C. I will draw this on, don't worry. And then if we were to come back down, we would have a D completion. So all in all, it would look something like this. Swing low to swing high, X to A to B, B to C. And then a CD completion would be somewhere down in this area right around here. Let me just double check that with my fib tool just to make sure it is correct. Yep. And yeah, this could also be a target location for that head and shoulders as well if it were to happen. Again, our zone is right here. You can see that D completion for the Cypher lines up exactly with the start of our structure-based zone for that head and shoulder profit. So it can all work together. Real quick, just to draw in one more bigger one for you. This can also be a Cypher. Swing low to swing high, X to A. First retracement here, A to B. Extension up here, B to C. And then all the way down here would be our CD completion, somewhere down here. really far off. That's why I didn't want to talk about it too much. But if you're into getting reps in, and reps are good, they increase your knowledge, don't get me wrong. This is something you can also put on your radar. So next up, we're going to be on the Pound Canada daily time frame. And you can see a lot of nothingness here on the charts. If we look at the past 5 days or so, we started with a bang. Price action gave us a high momentum bullish move that took us into a nice zone. And then we had a spike up, a spike down, a close in the middle. Spike up, a spike down, a close in the middle, a spike up, a spike down, a close in the middle, and a spike up, a spike down, a close in the middle. No surprises that if you were to go down to a lower time frame, and we will to prove this to you, this is going to look like consolidation. And of course, the bigger question is, well, where is this consolidation at? And if we look left, we'll see that consolidation is right at a previous level of structure. And if we look lefter, we'll see that consolidation is right at a previous level of structure. So it's important to understand that if you're looking for any type of breakout to the upside, it's going to be very similar to, what was the first one we looked at? I forgot already. Dollar yen. Although we may break out of this pattern on a lower time frame, what's more important is to break out of this level, this 187.20 level. Now, as we go down to a lower time frame, this consolidation is going to look like a nice little pattern formation. This is going to be a flag pattern, right? Price action puts up an impulsive move, and then we just shuffle sideways, a very nice high and tight-ish type of pattern here, which you would expect a bullish breakout from. However, again, what is important to keep in mind is that we haven't violated a key level of structure. And again, me personally, I can't expect bullish breakout until we actually break out of a key level. So be very careful about this one. How to trade it? Two ways. Well, one, again, wait for the breakout of this higher level. Or two, I would actually be interested in a breakout to the downside as well. We have a low water mark right here around 185.90s. If we can violate this level, we should continue down somewhere in between this zone right here, 185.47 and about 185.29. Looks to be what, a 50% Fibonacci level there as well. Fibonacci retracement, swing low to swing high. Yep, 50% right on there. I do think that's a decent level to look for a move to as well. So you don't have to make that decision now. That's the cool part. You don't have to sit here and be like, man, I don't know if I should get short yet. That seems kind of risky. Or I don't know if I have to get long yet. That seems kind of risky. What you do is you wait for the market to tell you, right? I won't be looking for shorts here until the market has broken and closed below this level. I won't be looking for longs until the market has broken and closed above this level. We want to be predictive in our analysis, reactive in our execution as traders. So what we're trying to do is we're just trying to set up our ideas. If price does this, then look for this. If price does that, then look for that, and then wait for the market to show its hand and tell us which option is more likely to happen. And that is a difference between professional analysis and just randomly doing stuff on a chart. Now, real quick, speaking of professional analysis, if you're interested in learning how to do professional analysis, check us out, www.tier1trading.com. I recommend a 14-day risk-free trial membership. Gets you on the platform, gives you access to some courses, gives you access to our live sessions, gives you access to our community, and there's no risk. Once your 14 days are up, you just lose your membership, so it's no type of sneaky auto bill or anything like that. www.tier1trading.com. Check it out. So we had a good prediction on gold last week. This time we're going to head over to silver, and silver is going to mess with your mind. It's going to be a perfect example of fractals. And by fractals, I mean that there are things within things within things within things. Kind of like how a snowflake has a pattern. And if you zoom in, there's a pattern within the pattern. And if you zoom in, there's a smaller pattern within the pattern within the pattern. This is going to give us a lot of wedges, right? So let's start with the daily chart. First and foremost, we have a nice wedge right here. With a wedge pattern, we would expect a breakout. The wedge by itself, actually, and this is maybe a little known fact, there is no bias for the break, meaning that a wedge pattern in its own right doesn't expect a bullish breakout or expect a bearish breakout. So just be careful with that. It's more about the overall analysis of the market. But we have a wedge here on the daily. And if we zoom into the 4-hour, you're going to see, well, I guess a better picture of that wedge. If we zoom into the hourly, there we go, you're going to see an even smaller wedge right here. Now, because of the bullish nature of silver, it would not surprise me if we came back up to retest this zone right here. So I am expecting a little bit more bullishness to the upside. And we have our wedge pattern. So this would be a perfect opportunity to see if you can catch a breakout to whatever's left of this move right up to this level. Now, you know, I personally wait for the breakout, meaning the confirmation, and then the pullback in the structure. But if you're a riskier trader who wants to set yourself up before the potential breaks happen, the cool thing about this is that this triangle pattern is so small as far as like the range goes that you're not really risking a lot to get involved, right? If you were to place an order right at market here, you know that you're clearly wrong if price goes there. And if you're aiming for a level up here right at the highs, well, that's an extremely good risk reward. So we also have the underlying bullish nature of the metals right now. So just something to keep in mind if you're considering it. So that's it for this week, guys. I hope you enjoyed the video. If you have any questions or comments about anything, feel free to leave it below. If you have any ideas of stuff you want me to do for videos, you guys know I do the Trading Coach podcast 3 days a week. So I take inspiration from what you guys want to hear about. So type that below as well. Like, follow, subscribe, do all the stuff you're supposed to do so that you don't miss the new content by me. And until next time, plan your trade, trade your plan. I'm 1 for 1 to start the year in the positive though, so that is a plus, and hopefully I can keep that going during the week ahead. Take care. I wanna be the best in the game, invest in my name, check no restraints, I'm obsessed with the pain, I ingest, I retain, assess and I change, possessed by the thought I'll be free one day from society's restraints, money, clout and fame, mud, disease, a plague, we all love to hate, have to play the game, have to make a name, all our insecurities are on display.